Hello, Accounting Superstars. Welcome to the Accounting Superstar channel. I'm glad you're here. This is the place to learn accounting. I'm Professor Don Bush, and I've been teaching accounting for about 30 years and been a CPA for about that long. So welcome. I've got a lot of great ways to teach accounting. So here we go. This is example number 3. So far we've done 2 examples on accounting for pensions. This is example number 3. Now example number 3 is very much like example number 2, with the exception that you guys got to help me out and figure out where these numbers go. So here's what's happening. Since this is example 3, we're calling it the year 2003, that these beginning balances came from example 2. They were the ending balances in example 2. So here we go. As you guys know, this is a worksheet to help us figure out the journal entries for pensions. And the journal entry is going to go right down here, and we'll figure out the end of the year balances, which will go right here. So here we are, just a little review here. On the left hand side we have items. These are the things that are happening during the year for the company's pension. In the middle, these are the calculations and entries for the journal entries. And on the right we have, it's called a memo entry, and it's a representation of what's happening in a third separate party, not directly connected to when we get to a construction. These people handle the pension. They make sure that retirees get paid. Here we go. The balance January 1st, 2003. These numbers right here were the ending balance for 2002, and we just transferred them up here to 2003. So what's going on? Just to repeat that pension assets are valued at $13,300 as a debit. Assets are debits, and the projected pension liability is a credit of $13,050. Now if you net these two together, you would end up with a debit balance of $250, the difference between the debits and the credits, which is placed right over here. So this line is not meant to balance. Debits don't equal credits, but the $250 debit is simply a summary of what's happening in the pension fund. So let's do some transactions. So the employee service costs, the employees worked hard, they earned their pension, and they earned $4,200, and we're going to debit it under pension expense. Now what we've got to figure out is, where does the credit go? Where does it go? Can you remember where it goes? Well, it goes right here under projected pension liability. There we are, and it's going to be a, what is it, debit or credit? It'll be a credit because the line has to balance horizontally. Employer contributions to the plan. Here we go. The company is sending $3,500 to the pension fund, and so they are crediting cash. So where does this go? Where's the debit go? Can you remember? Well, it goes under pension assets. Here we go, because it's increasing the value of the pension assets, and it's a debit, so we balance horizontally. Interest costs $653. It's a debit. Where is that coming from? It's coming from the beginning balance, the beginning projected pension liability. If you recall, the projected pension liability is the present value of the future obligations, the payments that need to be made to retirees. So there is an interest cost, and I'm just using 5% for the interest. It doesn't have to be 5%. Actuaries figure out what it ought to be. So 5% of the beginning balance, 5% of $13,050 is, rounding, $653 a debit. So we need a credit. Do you remember where it goes? Well, it goes right here under projected pension liability. There it is, and it's going to be a credit. It's increasing the liability. Actual return on pension assets. This is a good thing. The trust fund who's in charge of the pension did a good job. They invested the money, made a little bit of a return, and they made $200, and it's going to be a credit because it's reducing the burden of financing this pension plan. So it's a credit to pension expense for when we get to construction. But where does the debit go? The debit goes under pension assets. There it is, and it's a debit. And it's got to be a debit because we need the line horizontally balancing. Benefits paid to workers. Well, it's not coming out of the company's money. The company already funded their pension for this year. So the money's going to come out of the pension fund itself. So it'll reduce the pension assets because they're paying out money to retirees. And so we need a credit. $2,500 was paid out to workers, former workers. So if we have a credit under pension assets, where does the debit go? Well, the debit's going to go under projected liability. And it'll be a debit. There you go. So we balance horizontally. End of year balances. So we need to figure out, well, what's the journal entry here? Journal entry 2003. So what we have to do is add up the column for pension expense. So we've got a $4,200 debit, a $653 debit. We're going to add those two together, but we have a $200 credit, which we must subtract. So that will turn out to be $4,653, and it will end up being a debit. Cash, that's an easy column to add up. It'll be $3,500, and it'll be a credit balance. So the next question is, what should this pension asset liability be? Well, we've got a debit of $4,653. We have a credit of $3,500. So to make this all balance, we have to have a credit to make it all balance. And the credit is going to be the difference between these two numbers. It'll be $4,653 minus $3,500. So whatever that is, that will be the credit. And there it is. So $1,153 plus $3,500 equals the debit $4,653. So we're almost done. So we need to figure out the balance in the pension assets. So we need to just total up this column here. So we've got a $13,300 debit, a $3,500 debit. So we'll add those together, $200 debit, add that in. But we have a $2,500 credit, so we need to subtract the credit. If you do all that, you will get $14,500, and it will be a debit because the debits are much bigger. Adding up the projected pension liability, we have $13,050 as a credit. We have $4,200 as a credit, so we'll add those. $653 as a credit, so we need to add that. But we have a $2,500 debit. Those were the benefits paid out to workers. So if you add that all up and make sure you subtract out that debit, you get $15,403, and it should be a credit balance. Lastly, we need to make sure this all works out. So what we do is we look at our two balances. We say projected pension liability, that is $15,403. Pension assets, that is $14,500. We net the two together, and it's going to end up being a credit balance. The credits are larger than the debits. And looks like they're larger, gosh, maybe about $900 or so. There we go, pretty close, 903. Now we can double check our work. We can start up here at the top of this column and say, all right, we've got a $250 debit. And if we combine that with a $1,153 credit, if you net those two together, you get a 903 credit. So there we go. Coming down to the journal entries, where do we get the numbers? We get the numbers here from the line that says journal entry 2003. So we'll take these numbers and create a journal entry. So pension expense, we'll take the number right from here, $4,653. There we are, cash. It's a credit for $3,500. And finally, pension asset liability, it's a $1,153 credit. So we'll just put it in that slot right there. Now the balance sheet, always in the past we've had a non-current asset, but this time it's a non-current liability because they are underfunded. They're underfunded by $903. So the pension asset slash liability will be 903. In example number 4, we're going to learn about a few more transactions. We're not quite done yet. So I hope this helped. Hope you enjoyed the lesson, and I hope it made pensions a little bit more understandable. If you like this lesson, hit the like button and the subscribe button. That way I know that these lessons are helping you out. Until then, see you next time. Over and out.